Hello, my name is Maria Bezupova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz. We proceed with mini-series of meetings with brilliant market analysts to share their insights and forecasts for the quarter ahead. Today, I'm thrilled to discuss the hottest market topic for now, I guess, and this is urea. In order to do that, I'm happy to host again a super cool guest, Deepika Thapliyal, Deputy Managing Editor of Fertilizers at ICIS. I'm very glad to welcome you, Deepika, and thank you very much for joining me today.
Thank you, Maria, and thank you for inviting me back. It's so lovely to chat to you every quarter about what's going on with urea.
Exactly. The pleasure is mine. And Deepika, we meet today during extremely turbulent time globally. And also in our fertilizers market, it is an eventful time because today Indian APL issued counters for its long-awaited tender that was closed yesterday. So there are a lot of questions that I would like to ask you today. Indeed, we meet here every quarter to discuss what happened in the previous quarter that paved the path actually to where we are today. So let's follow this tradition and please tell me, what do you think were these main events that happened or didn't happen in Q1 that brought us to the situation we are today?
So Q1 started with, the entire Iranian story, how the production went down in Iran because of gas cuts and shortage of gas, which happens every winter. But this time it was much more severe than it was in the previous winters. And we had absolutely no urea coming from Iran for almost 3 to 4 months. So that did put a lot of pressure on supply, and supply was short. And it was short at a time when the season was there in Europe. There were Turkish buyers who were also short. So at the start of Q1, we saw prices firming, in fact, quite healthy upticks in prices. And then there was an Indian tender as well in Q1, and they were just able to buy a third of what they really wanted. They bought just over 550,000 tons, and they wanted like more, about 1.5 million. So India also was short at that time. US was also due to come in season soon. We had all this proposed tariffs as well in the EU, where there was talk of big tariffs on Russian imports that were coming in. These were proposed, they're still not come in, but that was going on as well. Then the US stepped in with the first bunch of tariffs against Canada and Mexico. So there were these 25% tariffs. So all this news was coming in Q1 at a time when the US was due to get into season. There was European season as well. And there was another Indian tender expected soon after the previous tender was not able to fulfill all the requirements in India. So all in all, in Q1, prices were pretty firm till, say, middle of February. And then after that, we saw this big slide coming in prices, especially in New Orleans in the US, which was actually leading this price surge because the second tender from India did not come as expected. It got delayed quite a lot. And we're talking about it now, so you can tell that it got delayed by over a month. And I think all that did hit sentiment. And then Iranian production started coming back on stream. And by early March, most of the producers had started producing. And we're already seeing them run at full rates now. So all these factors led to this slide in prices after mid-February. And then again, as you know, urea never quiet, always volatile. Last few weeks, we've seen prices go up again. And that was because of an Indian tender finally coming. And there was a big shooting of prices. And in all this, we've always had these, short few days. It's only 2-3 days, but there are these shutdowns going on in Egypt because of gas issues. So that is always there in the background as well, which does boost prices in Egypt. And because of Egypt, maybe traders then end up covering shorts in other markets as well. And with a new Indian tender also, that means that traders always cover their short positions whenever an Indian tender is announced because you don't know how the market will go once the tender closes. So all in all, it's been a volatile Q1 and Q2 looks no different to me.
Exactly. As you very rightly said, Urea is always volatile. So we can only discuss how much of this volatility we have now. Yes, Indian tender indeed was this largest elephant in the room during Q1, perhaps, and postponement of the tender resulted, as you rightly said, in all this roller coaster of the prices. But finally, we have this tender. It was out. It was closed yesterday, and we will now see how the results will come out. But how do you read the first results of it? That first of all, we know who were the bidders, what they bid actually in the tender, what is the L1 price, what is the price to one cost to another cost. So how do you read these first results of it?
So the price, although there is a wide difference in the prices for the East Coast versus the West Coast, the East Coast price is actually $13 more than the price that's come for the West Coast. So that always means that any seller will want to then sell to the East Coast rather than the West Coast because they make better money that way. So that is going to be a little tricky for IPL in this tender because they have said they want to buy 1.5 million tons, and I personally think they would have bought even more if they had got that kind of interest because they've already delayed the tender by a month. The season in India starts in June. We know it takes really long. For example, if you look at the US, it's very quick. Logistics work quickly. Urea comes to New Orleans, it can get distributed very quickly. India takes a long time. It takes almost 2 months from the time a tender closes to actually the time that the farmer gets the product. So they're already running a little behind schedule and they'll want to buy as much as possible. The surprising thing, though, is even though prices, and despite this $13 difference that I mentioned, the prices are not bad. And given in this market, which other region or destination is going to pay this much? So for a seller, it's quite a lucrative prospect to sell to India. But despite that, it doesn't look like India will get that 1.5 million tons that it wants as of now, and it's still too early. And Maria, you know how in Indian tenders things can really
Yes.
go topsy turvy very quickly. But as of now, I think they should manage to get about a healthy 1 million tons, maybe 1.2 million tons. But it's not going to be that 1.5 million tons that they have said they want. But still, anything above a million is a healthy volume for India. So they should get that quantity. The interesting thing, though, is despite the outlook being weaker for prices and for demand, and seasonally we are going to enter a time when things are slow, despite that, there's not a lot of urea available for shipment to India, or not as much as as India wants, or as much as we thought there would be, because the shipment is due until 12th of June. So that's mid of June, and there's still a long time. But as of now, it's not looking like they will hit that 1.5 million mark. It will be about a million, maybe 1.2 million at the most.
I see. And what happens next? So they do not procure all 1.5 million tons, but still they need it, obviously. So does it mean that India will come up with another tender very, very soon, like maybe immediately after this one?
I think there will be another tender from India for sure because the season is starting and they need to ramp up the purchases. Although stocks are still healthy and probably by June they will be even healthier because traditionally in India, April, May are very quiet months for consumption. So sales domestically are not a lot. So, stocks do build up before June. But then we all know in June, July, the minute people step in for application, stocks draw down very quickly, and there could be a shortage also happen very quickly. So because of that, we feel there will be another tender. But if they're able to procure about 1 million or even little more than a million in this tender, then I don't think they have to rush as such. But maybe in about a month's time, maybe a little sooner than that, there should be one more tender from India.
I see, I see. And can you please elaborate a bit more that you said that there is not enough supply for India? From which countries do you think the supply will be limited, and why? Why is that?
Actually, I was also very surprised to see because, our initial forecasts were like there will be a lot available for India because June shipment, 12th June is still a long way off, but and still very early estimates because things are moving right now. We think Arab Gulf should have about 600,000 tons, 650,000 tons. So that's about it. For Russia, for Prills, maybe max to max, they will have 300,000 tons. So that these are the two main suppliers to India. So it's not as much as we thought. Initially, we thought AG and Russia will have a lot more than this volume. They could still come and surprise us with if things turn and they feel no other market is going to buy. But I don't think they have that much available for India for supply, because you also have to understand, every time there's an Indian tender, some other buyer in some other market will say, well, I have to step in, I have to buy. So those tons could go to, things start kicking up in other destinations. So these two, and then there will be a few cargoes from here and there, maybe one or two from Southeast Asia, but they don't have a lot. That market is very tight. There could be something from Nigeria, definitely. Those prices do make sense for Nigerians to send volume. There could be probably something from Egypt, Algeria, but I mean, it will be tight. So yeah, in general, I mean, the usual suspects are there and they are selling to India, but the volumes are not as much as we thought, because if you count till mid of June, there should have been a lot more available for India.
I see. Thank you. And this actually moves us to the next topic, which is perhaps the the hottest topic that is discussed globally now. And it is, of course, the US tariffs for imports that has blown the whole world. A couple of days ago, how it connects with India. There are certain suppliers that you mentioned that would never go to India otherwise, like, for example, Algerians or Nigerians that we haven't seen also much. However, because of these tariffs, now they have certain limitations to go to their usual logical market, which is US. Of course, there are still many uncertainties related to the tariffs as I see it. For example, what will be the final tariff size, because many countries still negotiate with US and will negotiate. How US, Mexico, Canada free trade agreement works finally out for specifically for fertilizers now. But in general, what is your first reaction at these tariffs and their effect? How they will change the market, at least short term?
I think definitely they are going to increase the cost of fertilizer that a US farmer will have to pay. So that cost is definitely going to go up. But in the short term, I think the impact is pretty limited because the US season is over. So, the import season it gets over by the first week of April, or max to max by the second week of April. So there's not that many cargoes that are fresh cargoes that will be concluded and will come under the tariffs to be imported into the US. The cargoes that were already on the water, and we were estimating as much as 750,000 tons of urea could be on the water, those are not under tariff. So they are fine with that. So yeah, the short-term impact, I would say for now, is limited to NOLA and to the local market where prices went up. Every time they get some clarity or they feel like the tariffs could be paused and prices go down, then they say, oh no, actually, we are not going to pause the tariff. Then again, the market jumps up. So NOLA does get volatile, and exactly what you said, longer term visibility is impossible, because I'm sure everyone's going to try to renegotiate the situation with the US. But for now, if it continues in the way it is, definitely, I don't see that much of an impact for anybody who's under 10% tariff, because that could still be digested. But somebody like the Algerians, they have 30% tariffs. Definitely, those trade flows are going to change. They are not going to go to the US again when the season starts. They will try to go to other markets, maybe go to Europe more. And maybe Egyptians who only have a 10% tariff, they have that option that maybe they could look at more at the US and send more tons there. So trade flows will definitely start to change. And longer term, we need to look at that. Like, exactly what happened after the war, right? All this Russian trade flows changed so much. So things like that could happen. But I still feel like you absolutely agree with you. We haven't seen the end of this. So I'm pretty sure things will get renegotiated. Look at Canada right now. They started with 25% tariffs, and now it's zero because they've renegotiated the deal and there is no tariff on urea or other fertilizers coming. At least that's what all the market participants tell us. So yeah, I mean, I don't think we've seen the end of this story. We have to brace ourselves for more news.
Yes, let's see how it plays out. But if the situation stays as it is, let's say the tariffs will be as we have seen them, and no major changes will come. What do you think will be these long-term trade flows changes that will happen? Yes, Algeria clearly. Are there any other benefiters, let's say, from this situation? Maybe some countries who will have more opportunities or more procurement options because of that. What do you think?
Yeah, definitely. Countries like India in the tender, they could benefit. Even in this tender, they might even see immediate benefits because with all this uncertainty around the tariffs, duties, netbacks, people would just may just think, well, it's just simpler to send something to India. There's less hassle involved there. We don't know what's going to go on with the US. So countries like that, yeah, definitely would benefit. I would say even Europe might be able to benefit because if Algeria is not on an annual basis. If come more to to Europe, maybe there would be more competition between North African producers. Maybe that would benefit. But I think anyone else with a 10% tariff will still go to the US because US does take a big chunk of supply. But I think when opportunities, if they arise like short term, like there's an Indian tender, somebody else has a tender, people may prefer that rather than going to the US because the netbacks for them would be better.
Exactly. Thank you. I propose that let's move from the hottest topics to our usual topics, to our usual market situation that happen every quarter. So to the consumption side, first of all, of the equation, which markets will be in focus for Q2 in terms of consumption, where most of the tons will go after US, of course, that is already almost done with this purchasing. And what are your expectations in terms of demand from these markets versus previous year? How all this turbulence, if it does, influence this demand?
Yeah, I think Q2 is going to be traditionally slow, and that's why the outlook is usually weak for Q2 because the US will be done or is almost done with any imports. European season gets over. So the one seasons to watch would be say Australia comes in, they start purchasing. Then there's also we have a demand from Latin America, which is always which steps in at this time. So those markets are there, but we've never heard of globally any indexes getting affected because of Australia or Latin America stepping in, because they're not that big a demand, say like the US or Europe. Brazil, I don't think will come back till maybe July now. So they're still some time away. We thought they could be a little sooner, but it looks like July. That's what most say. The one market that will keep buying will be India, of course, because they come into season. So these markets to buy, but Q2 is typically slow. So that is why I think there will be buying, but it's going to be slow. And all these factors don't make buyers confident. So many things going on globally, talk of a recession. They see gas prices coming down. Look at what's happening with crude. Those prices have really dropped. So everyone will worry about the economy. And I don't think we're going to see any burst of activity. Yeah, because anyway, traditionally, we are entering into this quiet. I mean, things will go on, but it's not going to be as active as we've seen in Q1.
Yes, thank you. Thank you. I see. And what about the supply side of our equation? Do you expect here some news or some changes from the status quo that we have at the moment?
I think the main thing to watch will be China but now I get more confused about what to say about China because again now the whole tariff is gone out of control. This trade war between US and China is really getting very serious. So we were expecting that maybe July could be the earliest we will see exports coming from China. And even at that point, we were not expecting any big rush of exports. I think on the lower end, the estimates were like 1.5 million tons or something is what China will export this year for urea. But I don't really know anymore if this is really going to happen because if they do get involved in this trade war and doesn't get sorted soon, then usually whenever we see that happen, China starts to protect their domestic economy. They don't really open up or relax anything. So maybe we could see another year without any exports. But we had anticipated that they should come back in July, not with a lot, But maybe with, some kind of quota system like they have for phosphates, maybe some state-run companies start exporting a little bit. So that is what we were expecting, but let's see. Another thing to watch is, of course, Russia. They have so much urea. We all know every year they have got even stronger and stronger. The exports have gone up since the war, and significantly. I think last year, 2024, they've exported more than 9 million tons of urea, maybe even 10 million tons. And those exports used to be 7 million tons just before the war started. So I think Russia will continue. We need to see how the tariffs and how the EU Parliament votes on the tariffs into Europe, because that could change things, that could change trade flows again. They clearly have an advantage to ship to the US because they're not directly under the tariffs. So I think Russia will remain a powerhouse of urea. That's not going to change. So that supply is quite strong. And because there's a lot of urea coming there, that could keep downward pressure on prices. In terms of other markets on the supply side, I think, yeah, Iran, there are a lot of questions because of political tensions now. But I think as of now, it looks like they should continue to export and they will be back. I think April is the first month that they actually back after all the gas cuts. And we see about 250,000 tons or 270,000 tons of urea is available from Iran for April shipment. So that's definitely going to put a lot of, that's something we need to watch, although those prices are also going up. But maybe we could see some of the material go to India via China or something, like re-export as well. They are key suppliers to Turkey and Brazil. So Iranian urea does keep those markets well supplied. But as of now, I don't see any immediate glitches anywhere on the supply side. Supply looks more or less pretty stable. Egypt will have their gas issues in the summer, as they always do. So we need to brace for that. But I think this year the situation could be better than the previous year because the government has been quite proactive with the LNG imports, and they are importing quite a lot of gas.
Right, right. So if put everything together, looks like the supply will be quite a lot of supply we will have. So should we expect price depression, like significant price depression?
I think there could be a moment of, weaker prices that we see over the next few months. And then maybe as the seasons start in like Brazil and in other markets, prices will start to recover. So yeah, I mean, there is nothing out of the ordinary in terms of supply. It's the supply. I would say it's more or less stable year on year supply. So I don't think it's going to put any unforeseen pressure on prices. But we need to always watch for anything now, because anything fresh with tariffs, political tensions, like you had said in the Middle East, anything over there, all those factors we need to watch.
Right, right, indeed. And not plan for quite a long time ahead. Definitely. You already mentioned a bit, but I would like to ask more about that, about the raw material side of things. So obviously, all this turbulence directly affects all commodity markets, and especially such markets as crude or gas in case of nitrogen fertilizers. How do you see the price of gas developing? Because the previous forecast and the previous, let's say, corridor that we discussed with you a quarter ago was somewhere around 40 euros per megawatt hour, more or less level in Europe. But now this level is already, I would say, 10% lower than what we discussed. So what is your expectation? Which corridor should we watch, let's say, for Q2?
So I was actually reading our gas outlook from our gas team on this, and I think they are expecting, especially for Europe. I don't think there is any concern on the gas side yet, although there is talk of some lower temperatures, which could mean household demand will be higher in April. So that was one thing I picked up. But in the longer term, they are not expecting any big depression, or I would say rather no big concern on the pricing front. In fact, later in the year there were even some concerns if the storage will be met. So maybe then we could see some pickup again in the prices. So yeah, again, it looked pretty volatile on gas, but whoever we speak to hasn't really pointed out to any worries. In fact, as of now, the feeling is with gas prices coming down, maybe European producers' margins will improve, and probably that would mean that they may have more incentive to produce urea, ammonia, generally nitrates in Europe. But no one really taking a much longer term view. It again is a mixed picture, but I didn't pick up anything as like of big concern really coming from gas.
Yeah, let's see how it develops. It is such a volatile moment that it is really difficult to look further than maybe 1 week or even less than that. So I want to thank you very much, Deepika, for your insights as usual. And I will be very glad to meet you here again in a quarter from now. And hopefully we will have some of this volatility or uncertainties sorted out until then, hopefully. And I wish you a very, very good quarter ahead.
Thank you, Maria. I really enjoyed talking to you as always. And yeah, I really hope the next time we meet, we have more clarity. I mean, I think right now things are, I think hopefully it can't get worse than this in terms of visibility, but let's see. There's never a dull moment in the market.
Indeed.
Thank you very much.
Thank you. Thank you for watching. As usually, I will leave all credentials of Deepika and ICIS in the comments. Please let me know in the comments which other hot topic related to urea market you would like me to uncover, and I will be glad to do so with Deepika, maybe even sooner than in a quarter from now. Please subscribe to the channel, put like to this video, and see you soon.